Hey guys, welcome back to the channel. To start off the video, I just kind of wanted to say thank you to all the new subscribers to this channel. As of the time of recording this video, the channel now has 35 total subscribers, and this number has actually doubled in the past 9 days, which I think is pretty crazy. Now, one thing that I've noticed while looking through my YouTube channel is something curious in the analytics. So it kind of shows that all of my subscribers are men, and all of them are between the ages of 25 and 34. Now, I can kind of see how this would be like the largest part of my demographics. However, it seems a little bit weird that literally everybody who is subscribed to me falls within this category. So if this isn't true, if you're subscribed to me and you don't actually fall in this group, let me know in the comments just because I find it a little weird. I also wanted to shout out subscriber eTrinidad 5.0 for commenting on my last video. I'm always asking for suggestions of stocks that I should look at in the future and do some analysis on, and he was the first one to give me a really solid lead. So, by request, my next video will be on AT&T, and that is currently in the works right now. One more thing before we get started with the analysis. I also noticed that only 3% of the people who view my videos have subscribed to the channel. So, after you guys enjoy the video, if you do, consider subscribing to the channel if you want to see more videos in the future. Now to get into the video, the company that we're going to be talking about today is TOL Brothers. So TOL Brothers, in my opinion, is the world's highest quality mass market home builder. Now this is kind of shown by them winning Fortune magazine's #1 home builder award for the last 6 years. They currently operate in 24 different states and in over 50 different markets around the United States, and they continue to expand this moving forward into new markets and new territories. They've also made a very large push into multi-tenant buildings like apartments, campus living facilities, and urban residencies, which shows how they're willing to adapt to the changing environment and are really trying to diversify their business model. Now let's talk about their current market valuation and their performance over the last couple months. Currently, the stock is trading for $19 per share, which is 60% lower than their highs that they achieved around mid-February at $50 per share. Now, this share price means that the company is valued around $2.5 billion, and this number will become important towards the end of the video, so keep that in the back of your mind for now. This current stock price also means that the company is now trading at a PE ratio of about 5. I think that that's absolutely insane, especially when you take in consideration the growth that this company expects to have and the prestige that their name comes with because of their very strong brand. For some context, another company that is known for their brand strength is Coke. And with very little growth ahead of them, they still trade for a PE ratio of nearly 20. That's right, for every dollar that Coke makes, you are paying 4 times as much as you would for each dollar that TOL Brothers makes. And I think this goes to show how undervalued TOL Brothers stock is right now. Over the past 4 years, TOL Brothers has grown their revenue by almost 70%. Even while doing this, they have been able to maintain fairly consistent gross margins, which shows us that they're not inflating these numbers by selling homes at a discount, but demand for their homes is just growing at a very quick rate. During the same time period, the home building industry has grown by 7%. That is 10 times slower than TOL Brothers, and it really goes to show how strong of a company they are and the massive opportunity ahead of them. TOL Brothers, pretty recently, in 2017, also started paying dividends to their shareholders. Now historically they've not paid out a lot, but just above a 10% payout ratio, which has never yielded more than a 1.5 dividend until the last couple weeks. But now their dividend yield is almost 2.5%. And with such a low payout ratio of just above 10%, once this situation passes, they would be likely able to drastically increase their dividends if they really wanted to. Now, I don't foresee this happening, but I can't really see them cutting their dividend either because it's such a low percentage of the money that they actually make. Now, to highlight a couple things that I really like about the company, TOL has been making strides towards diversifying their business, which not only limits their risk, but also makes their brand stronger and more visible to the public. As a recent college graduate, I'd like to think I understand the student living business a little bit, And from my experience, if done right, it really is a cash cow because students will pay upwards of $700 for one of 4 bedrooms and a 1,500 square foot unit. So for a unit that could not have cost more than $300,000 to build originally, they're raking in over $2,500 a month in rent. Because of this, I think that TOL moving into this industry is a very good decision and can open up different avenues for them to make money in the future. TOL is also investing heavily in land for these projects in the future, which is the best way to do this in my opinion. Land within walking distances to colleges or to big urban areas is not easy to come by and extremely valuable. As time goes on, other builders will find it harder to get these properties because TOL was ahead of the curve in getting these deals. And I know it's cliche, but Mark Twain said it best in a memo to Congress: buy land, they ain't making any more of it. TOL also stands out from their peers because they have such a strong buyer profile. 20% of their buyers pay in all cash, which means they can close a deal much faster because they don't have to bring in a bank to finance the transaction. Amongst their buyers, the average FICO score, or in other words, a person's credit score, is 760, which means that the people buying these buildings have very good track records of handling money and debt responsibly. Their transactions also do not have a lot of debt tacked onto them in comparison to many other home builders with an average loan to value of 68%. To put this into context, most people recommend putting 15 to 20% down on a house when you buy it, but those who purchase Toll Brothers properties put down an average of 32% on their houses. Another thing I really like about Toll Brothers is their price to tangible book value and how this metric has fluctuated over time. Having a low price to tangible book value is a good indicator that a stock is trading below what they're actually worth. What this shows investors is that if the company's accounting figures reflect market prices of their assets, the company could sell everything they own and go out of business right now and still make more money than what the stock price is valuing the company at. Now, in an interview about a month ago, the CEO of Toll Brothers mentioned that the company is usually pretty actively involved in buying back shares when this number is about 1. But right now, it's trading at almost half of that. In the beginning of the video, I mentioned how their shares are trading below $20 per share right now, but their book value per share was $39 at the end of 2019. And as you can see on the chart on the screen, Toll Brothers is usually in the range of 1 to 2 when it comes to this metric, and this shows me that the company has been beaten down so much in this bull market that it's a really good time to buy them. Now, like other investments, Toll Brothers doesn't come without their risks. And when times get pretty rough in the stock market, home builders usually experience a slowdown in business, but this doesn't usually occur for around 6 to 9 months after the stock market crashes. But I think most people are willing to admit that this is not a normal situation, nor is it a normal bull market, because what we are experiencing is not a financial problem, but it's a health problem. I believe that Toll employees are continuing to build these properties, even in the states that are experiencing lockdown, because they are in an essential industry. If anything, this crisis will push demand for the houses down the road a little bit, maybe a couple months, but it shouldn't decrease it, since the situation will not continue forever, and there is no systemic problem in our economy. Now, with all that said, I think you may have already gathered that I'm pretty excited to get into this stock, and I actually bought around $250 worth of Toll stock already. I picked them up for a price of around $20, and even though the price has fallen since then, I'm pretty happy with the investment. Let me know what you guys think about Toll Brothers stock in the comments, and as I mentioned, I'll be doing a video on AT&T in the future. Also, to kind of hit on the same vein as that, if you guys have recommendations or stocks that you want to see analyzed, make sure you leave them in the comments below and then subscribe to the channel so you get notified whenever I release those videos. And if you guys enjoyed the video, make sure to give it a like and subscribe and hit the notification bell to be notified when I post a new video, and I will see you guys in the next one.